Thank you for watching the S&B Forex and Futures weekly analysis. My name is Mark Principato. So in today's segment, we are going to review, as we do every week, the S&P 500 CFD, the Euro dollar, pound dollar, and Aussie dollar to get a sense of some of the bigger picture possibilities for the upcoming week. Remember, we're still in holiday mode here in the US. We just came off of a holiday, and volume is going to be typically lighter, which means volatility is usually somewhat more muted, but that doesn't guarantee anything. A news event can come out and change things, but volume in these conditions is typically sporadic, something to keep in mind. All right, so let's begin here with the technical situation on the S&P. Now, as I was just telling some people in our chat room here, there are some fundamental forces that are driving these things. We have a very strong dollar at the moment, thanks to a few things that are going on overseas, and the S&P is liking it. Clearly, there was a reversal a few weeks back, and we've just been making higher highs and higher lows ever since. This is an 8-hour chart of the S&P. Now, I started talking about the possible reversal situation back here once we started getting these bullish candles. Now, since then, a higher low was put back in at 1600, all right, and it's made the higher high, clearly. So this is still there is still bullish momentum in the stock market. We are approaching the 1650 resistance level. By reaching that level, we will be completing a cycle on our pattern recognition methodology, which can then lead to further possibilities as this thing moves forward. Our traders know what to look for there. But in terms of price action, we're dealing with bullish momentum. So that means that when we reach 1650, the only short possibilities that I would even think about are scalping or day trading only, no bigger picture, because this thing is going to have to really put in some sort of greater sign in order for that bigger picture to kick in. Plus, you're shorting. If you shorted it up there with high expectations, you're doing that in front of clear-cut higher lows. That's not a good idea. All right, expecting reversals just because there's resistance. I think based on this structure and based what's driving this, I think it's more likely to go through the resistance. So what does that mean? How do we do stuff with this? How do we trade this? Well, any close above that 1650, like if we're closing at 1655 or somewhere along those prices during the week, that's going to be further confirmation of the bullish momentum. In this type of momentum, I would be looking for retracements to go long. Now, on the bigger picture basis, let's take a look at a 4-hour chart. The question is what prices during the week may present buying opportunities? Well, you have this price right here, 1614. There was a nice reaction off that price. Now we're at 1641. That's a long ways from where we are right now. This thing needs to give us a decent retracement if we're going to see that opportunity. But that would be what I would call a more conservative long, because if you measure this, and based on if this is the current high, we have a max fake area between 1614 and 1606. That would be great for our trick pattern in that area, all right, and that basically that 8-point area. And that area can present a nice place for a bigger picture long. Now again, you have to be able to validate that. If you can't validate that, then it's going to be difficult trading, because if it falls through that area and closes below the 1606 or whatever that low was there, then that would tell us that this thing is not intending to go back up anytime soon and will cancel out the whole long idea. So that's very important to keep in mind. Now, if it falls through, the next level, of course, would be 1600. Look at this, there's a nice double bottom there, so we have a nice reference pivot. It's a whole number. So a number of reasons for buyers to be attracted to that price. Now, the area for us would be below 1600. into those low 1590s. That would represent the max fake area. For those of you that don't know what max fake is, that's a term that we use to measure a certain area to look for reversals. And this one goes as low as 1589. So that whole range of prices could be an area to anticipate reversals. The key to that, though, is validation, which you can also find on a slightly smaller time frame, like an hourly chart. So those are the two main prices I would be looking for in terms of long opportunities in the S&P. Any close below, if we're trading back at 1589 or something like that, and we're closing below that, especially like on a 4-hour chart, that would cancel out all this bullishness, because we should not be breaking these supports if we are as strong as the market claims it is. So that's what you have to watch out for. So those would be my prices for possible longs. Any more shallow than that, like if you're looking at 1631 or you find some kind of intraday support, then I would only look for very small time frame trades, because we're on a high. And typically, as this thing pushes higher and higher, there's just more possibility that it's going to retrace. So you don't want to get caught buying near that high and having the thing retrace on you significantly and trying to carry a swing trade in that. So I would just be very, very conservative, on the smaller picture. The whole purpose of this analysis is to focus on bigger picture. Smaller picture is what I do in the chat room. So if you want to know the smaller picture, you have to come into the chat room. All right, anyway, so that's what I'd be watching for on the S&P. So remember, just to sum it up, I would be looking for bigger picture longs around that 1614 to like 1600 area, or below that 1600 area, and only smaller time frame shorts around 1650, which I'm going to talk about in a moment here. All right, now let's just compare this to the Dow, just for comparison purposes, just to see if it's showing us anything different. And it's not. It usually doesn't, but occasionally it may give you a clue. There was a nice trick pattern here on the Dow off of that failed low. And this is the kind of stuff we look for. This is exactly the kind of stuff we look for. So that was a nice higher low, broke out to a new high. So the Dow is looking pretty good as well. And the major level on that would be 15,300 area. If it gets up there, obviously you're completing a segment and could present some smaller time frame selling opportunities. Other than that, I would wait for a long opportunity until this thing shows us otherwise. Okay, so let's take a look at the euro dollar on the 4-hour time frame. So as we can see, the momentum over the previous 2 weeks here has been extremely bearish. Look at this when we zoom out on the broad picture. When I zoom all the way out like this. Now look at this, what's happening here. This goes back months, right? Months and months. Now, this sell-off has happened in a very relatively short period of time. So, when you have a situation like this, you have a sharp movement upward followed by a sharp bearish movement. This is what leads to our trick pattern. So this is a bigger picture one, and the max fake is obviously much deeper on this. If I measure this movement here, I mean, we're looking at going as low as the 2670s is a possibility. That's the maximum area, right? So in that range, basically from here to like 2670, in that range of prices, which is a pretty wide range, there's a greater possibility of a reversal. Now, fundamentally speaking, there's nothing. All right. Fundamentally speaking, everything seems to be weighed against the euro, and again, they're hating it, and it's going to go to zero, according if you read some of these reports. Now, I don't trade on fundamentals. It's good to be aware of when the technicals and the fundamentals line up and all that kind of stuff, but you also have to be aware of the fact that the technicals can reverse, fight the fundamentals. I remember back in here when this thing was happening, when this thing went up, the fundamentals were still pretty bearish. There were a lot of, negative reports and blah, 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 and this and that and whatever. And this still went up a few hundred pips, which I'm sure drove a lot of people crazy. So just keep that in mind. Fundamentals aren't everything. They're just, you want to sort of keep an eye on them. But even with this nastiness, the hating of the euro here, we haven't taken out this 28 even low yet, although it may do it this week. And we haven't taken out this 2750 area. These are pretty important lows. And even if those lows are taken out, yes, that will confirm bearish momentum. But I'm going to be keeping a very close eye in that range between that 2670 area and where we are now. Because if I get some sort of reversal structure in there, and reversal structures look like this here, higher lows, failed lows. Look at the failed lows over here, right? Higher low back here. Those are reversal structures, higher low over here. I would like to see something like that. If I can find something like that, that may allow me to start building a position long for a leg that can at least retrace, a good portion of the way, maybe halfway, back up into the 3150s. I know it's hard to believe at this point, but that's what I'd be looking for. But I can't start anything like that until I get some sort of confirmation structure. And that can take, based on a 4-hour chart, that can take days to form. So if I see that possibility unfolding during the week, that is something that's going to get my attention. On the other hand, if this thing just keeps pushing lows like it's been doing, and we start closing below these lows and it just stays as weak as it's staying, then there's no trades. There's no swing trades along to be had. It's that simple. So that's the bigger picture outlook. Now, look, nothing goes in a straight line. As much as everybody hates this thing right now, nothing goes in a straight line. So there may be retracements. If you get a small retracement, those smaller retracements, which could be a couple of hundred pips at this point, can present smaller time frame selling opportunities. But as far as big picture selling opportunities, I would not do it around this level. All right. Ideally, what I would like to see to go short this thing is at least a psychological resistance, which is around the 3170s. At least 3150 or something, right? Halfway up, or 3120s at least. Somewhere along those lines. Now, you may get a more aggressive one a little bit lower in the 2990s at this point, somewhere around there. That's around a 38% retracement. And when these things are trending, a lot of times it won't go beyond there. But the key point is the validation. If it goes and tests that area and you can't validate it properly, or it tests it, it validates, but then it fails to go lower and starts going back up, you must get out and cancel that short position, because there are many times when it'll fake everyone into that trade and then squeeze them all out. You have to watch for that. The only thing you can do is just take that loss and get out if it does something like that on that aggressive short level. All right, that's bigger picture, because if it fails somewhere at one of those retracement levels, it can then go for that lower low, which would present a nice swing trade. So I would watch that. But ideally, I would like to see a much higher retracement. That would be much more ideal for a short. I don't know if the market's going to want to deliver that. Okay, so just something to keep in mind on the bigger picture. Any questions about the euro? So at these levels, just to sum it up, at these levels, I would be watching for reversal structures to the long side. But like I said, at the moment, there's nothing there. It can take a few days. Okay, so here's the pound dollar on the 4-hour chart. And as we can see on this picture, the momentum is clearly bearish, clearly lower highs and lower lows. There was a sort of a break of this high here, which maybe it could have possibly signaled a change, only to be followed by a close below this low, which cancels the whole thing out. This was a very strong push. This is all, again, triggered by some fundamental stuff that was coming out. We went below the 150, which is pretty key. We closed below it. So a lot of weakness there on the bigger picture. When we zoom out on this one, I mean, look what's happening here. This could be an expanding triangle, but it's really hard to say at this point. This thing really needs to show some signs of recovery, some signs of stabilization. sort of like this failed low here or something, or a higher low, but we have nothing. So that means right now I would be very cautious with longs. If you're interested in taking longs, I would do it only on a scalping or day trading basis, which has nothing to do with this bigger picture here. You have to find smaller picture validations. On the bigger picture, this thing is just showing signs of weakness. You know, this little failed low here is hardly a sign of stabilization. With this type of momentum that you're facing, this thing is going to need time. It's going to need at least a few weeks probably. You need to put in some sort of significant high and some sort of significant low. And when that range is established, which it's not yet, then in order to say, okay, this thing is gathering strength, it needs to break that high. Sort of like this back here. It put in a low, it put in some sort of high, it retested, it broke out to the upside, and you saw the momentum there, right? It doesn't happen like this every time. But you want some sort of variation of a failed low, and a high needs to be taken out. Right now, the reference high is up here, 53.07. That's a long ways from where we are. So unless we take that out, there's just no reason to be looking for longs on the bigger picture. All right, until it starts to stabilize. Now on the smaller, on the bigger picture, as far as the next place to go short, if you're looking to short on a retracement, I would at least I would watch the 50-30 area because, you know, for trending, that may present a trend continuation area if you can validate it. If it goes through that area, then you're looking at the 5130s to 5150s. That would be the psychological resistance, which was this old support as well. So those are the two price areas I would look for any kind of continuations short on the pound. Otherwise, I would leave this one alone on the bigger picture. Smaller picture is a different story. Also, keep in mind, when we measure the max fake here, keep in mind, we're still in the max fake zone. See that? This thing could go as low as 48.24. We're still in the max fake zone. So that would also mean that if you short it now with big ideas, you're shorting it in a very risky area if you're planning on holding on to it. Scalping and day trading is a different story. But if you think you're going to swing trade it at these levels, in my opinion, it's very risky. That's why I would wait for one of those retracement levels or something along those lines to establish short on the bigger picture. Otherwise, just leave it alone. Sometimes, you know, these things, when they're pushing lows or they're pushing highs, they're very hard to get involved in because of the chances of them turning around. You don't want to get caught in that turnaround. If it never retraces, it never retraces. That's why you just work with the smaller time frame opportunities. That's what our active traders do. Okay, so let's take a look at the Aussie dollar on the bigger picture first. An Aussie dollar, I mean, these I think this is considered an emerging market currency, I believe, or whatever. We do know it's a commodity market currency. I don't know if this is part of the emerging group. It might be. I may be wrong on that. But I know one thing. It's extremely weak. If you look at gold and silver, they also look like this. So there's some correlation there. But point is, though, you know, this thing is extremely beaten up. This thing is so beat up. It's been trying to stabilize. Now, even though it's been getting beat up, I want you to notice this. You see how it keeps popping up and pulling back and popping up and pulling back? These new lows are not dramatic new lows. They're not. This low over here was 91.58. This new low here was 91.03. Relative to the bigger picture, 50 pips is not a lot. This new low here was 90.33. So what is that? That's about 70 pips lower. Again, it's not huge. So low to low, the momentum is drying up, right? Now this low, 93.16 to 91.70, okay, that's a little bit more decent. But these lows, the momentum is drying up. Already we have a failed low here. We're coming to a major number, 90 even, is a major psychological number, right? So already people are trying to hold this thing up, or there's some buyers there. In my opinion, this thing is a very high risk short. Okay, at this stage, very high risk short. I would not go long, I would not go short. Intraday, smaller time frame, it's a different picture. I would look at this thing as a day trading instrument, not a scalping instrument. But outside of that, bigger picture, this thing is not ready for anything yet. It needs a few weeks to stabilize. Now, if this thing starts closing above these highs, 91 whatever, 92 whatever, that's going to be signs of not reversal, but in my opinion, more of a stabilization situation. Once you get those closes, then I would watch for retests of these lows for possible longs on the bigger picture. That scenario can take weeks to play out, weeks. So I wouldn't really spend a lot of time staring at this thing right now. Check it occasionally and see how it's behaving around these levels. Now, intraday, again, it's a different story. There are going to be more opportunities, obviously, on a smaller time frame. But your expectations have to be low, and you have to be very patient with this thing. I'm not going to get into the details, for this recording, but bigger picture, in order for you to really prove reversal, this market needs to close above a significant swing high. And right now, that's 93.30s. 93.30s. You need to close above that, and you need to be making higher lows to say, okay, this thing is reversing. And then that will open up like the 96.50s area, back up to these swing highs up in there. That would open up those possibilities. But until then, you really have nothing here just yet. All right, nice beginnings, but still not enough time. This thing needs time. Let's just kind of look at this on a 4-hour chart. On a 4-hour chart, it looks a little bit more compelling. But like I said, it looked compelling back here too. This thing needs some time. So that's what I have to say about the Aussie dollar. Watch the New Zealand dollar for correlation as well. And gold may be able to give you clues too. But this thing seems to be very tied to the New Zealand dollar. All right, so that's all for our analysis today. Thank you for watching the SMB Forex and Futures weekly analysis. My name is Mark Principato, and I will see you next week.